Hello students, I'm Professor Harmanpreet Kaur. Today we will discuss deductions under section 80CCC, 80CCD and 80D that are available to assessee out of his gross total income. First of all, let's start with the section 80CCC that is related to the contribution to pension fund. This deduction is available only to individual, and this deduction is allowed if certain amount is paid or deposited with a life insurance corporation or any other insurer to effect contract of annuity or pension out of a fund. The payment must be made out of income. Income can be of current year or past year, which is chargeable to tax. The rate of deduction is actual amount paid under this scheme or rupees 1,50,000, whichever is less. Then next we have deduction under section 80 CCD. This deduction is related to contribution to national pension scheme of central government or of any other employer. This deduction is available to individual. The individual can be employed by the central government on or after 1st January 2004 or employed by any other employer or self-employed, and he has in the previous year deposited any amount under a pension scheme as notified by the central government. National pension scheme also includes National pension scheme introduced in December 2003 and Atal Pension Yojana as notified in February 2016. Next, we will discuss the amount of deduction, that how much deduction can an individual claim under this section. If the individual is employee of central government or non-government, then amount of deduction is employee's own contribution or 10% of salary, whichever is less, plus contribution of central government or other employer or 10% of salary. And in case employee is of central government, then 14% of salary, whichever is less, shall be allowed as deduction under this section. And if the individual is self-employed, then amount of deduction shall be depositor's own contribution to national pension scheme or 20% of gross total income, whichever is less. And moreover, additional deduction up to rupees 50,000 in respect of depositor's contribution in addition to overall cap of rupees 1,50,000 is also available. Additional deduction shall be allowed to specified depositor, that is government employee, non-government employee or non-salaried employee who has paid any amount under the new pension scheme. Next deduction we have under section 80D. This deduction is regarding medical insurance premium, preventive health checkup and contribution made to central government health scheme. This deduction is available to individual and HUF. First of all, let's discuss if individual pays or contributes in any of the schemes in the central government health scheme or medical insurance policy or preventive health checkup, then he is eligible under this section to avail deduction. If the payment by individual is made for self, spouse or dependent children, then he can contribute in medical insurance policy of GIC as approved by central government or of any other insurer approved by IRDA, or contribution to central government health scheme and preventive health checkup. And if individual makes payment for parents, then he can invest in medical insurance premium of GIC as approved by central government or of any other insurer approved by IRDA and preventive health checkup. If the payment under this is made by the HUF, payment can be made in the name of any member or members of HUF, then eligible scheme under which he can deposit or under which he can pay so as to avail this deduction is medical insurance policy of GIC approved by central government or of any other insurer approved by IRDA. Now, the concept of medical insurance has been divided into four parts. First, let's discuss part number 1, that is related to medical insurance policy of individual, spouse, and dependent children and contribution made to central government health scheme. So, if this deduction is available as follows: actual premium deposited in any mode other than cash regarding medical insurance policy of assessee, his or her spouse, and all dependent children put together, and preventive health checkup amount up to rupees 5,000 only, and contribution made to central government health scheme or rupees 25,000, and in case it is he is a senior citizen, rupees 50,000. Whichever is less from these 2 points shall be allowed as deduction under section 80D. Next, we have the second part. Second part relates to medical insurance policy of parent or parents. Deduction shall be allowed as follows: actual premium deposited in any mode other than cash regarding medical insurance policy of parents and preventive health checkup. Parents may or may not be dependent upon the assessee or rupees 25,000, and in case assessee is a senior citizen, in that case rupees 50,000. The least of these two, the least of the 2 points shall be allowed as deduction. Next, we have part number 3, that is a medical insurance policy taken by HUF. In case of HUF, deduction shall be allowed if the amount of medical insurance premium paid in any mode other than cash on the health of any member of HUF does not exceed rupees 25,000, and in case of senior citizen it does not exceed rupees 50,000. Deduction regarding parents shall be allowed in addition to the deduction available to the assessee for the medical insurance of self, spouse, and children. So, if the HUF takes the medical insurance policy, it means the deduction shall not be more than rupees 25,000, and in case of senior citizens, it should not exceed rupees 50,000. Next, part number 4 is related to the medical expenditure of a senior citizen. Senior citizen means whose age is 60 years or above. In case senior citizen has not got health insurance coverage, a deduction up to a maximum of rupees 50,000 shall be allowed regarding any payment made on account of medical expenditure incurred in respect of a senior citizen. So these were the deductions that are available to the assessee under section 80CCC, 80CCD and 80D. Thank you.